What is a rising wedge? A rising wedge is a bearish chart pattern consisting of two converging trend lines, with the first line connecting the recent lower highs and higher highs, and a second trend line connecting the recent lows. The resulting shape looks like a triangle that is angled upward. The opposite of a rising wedge pattern is a falling wedge. The rising wedge pattern can be interpreted as a bearish wedge as the low is overtaking the high in which the lower supporting trend line is steeper. Though the falling wedges have a similar shape, the only differences being the slope of the triangle and the implied result of the pattern. The rising wedge, ascending, pattern in which the trading volume decreases as the wedge progresses signals the future falling prices or a breakout to a downtrend, making it a bearish pattern. What happens after the rising wedge pattern appears? The rising wedge appears at the end of a trend. Therefore, the next move after the ascending wedge pattern forms is a bearish reversal. The bearish reversal can be confirmed when the market falls.